Hi, my name is Wilton Reisenhuber, and I'm the creator of Fintel. Lately, I've been starting to do some little updates on some stocks that we've been following. And today, I thought I would take a look at AMC. AMC, of course, is a very popular stock with people that are interested in short squeezes. And it's probably one of the most popular stocks that we have on Fintel right now. A lot of people are really interested in a short squeeze, and a lot of people really believe it's going to happen. And so I thought it might be useful to sit down and look at the Fintel data and show you what Fintel, at least the data that we have, is suggesting around AMC and what we're going to have to see change in order for a short squeeze to happen. So with that in mind, I'm going to go ahead and share my screen with you, and we're going to take a look at the AMC short interest page on Fintel. So this is the page that we have, and this includes a lot of data, all of the data that we can find right now on short interest, all on a single page. And at the very top of this page, you're going to see a short squeeze score of 84 out of 100. So this is a pretty good score, right? It's 121. It ranks 121 out of 10,000. I know that AMC has been in the 90s in the past. It's been lower as well. And this number can change throughout the day. But overall, it's very high. And what that means is it measures the risk of a short squeeze relative to its peers. It's not a prediction. It doesn't say that there's an 84% chance of a short squeeze. It just means that of all the companies that we track, 10,000 of them, this has a higher risk of a short squeeze than 84% of its peers. Okay. So I will talk to you a little bit more about what goes into this, but let's walk down the page here. The short shares availability right now is 600,000 shares. This is the shares that are available to be borrowed at a leading prime brokerage that publishes their numbers. This is not the total number of shares borrowable in the entire market. That number I don't believe is even available, but it's at least one broker. So don't think that if this goes down to zero that there's no shares to be borrowed anywhere. Okay, it just is a kind of a it's just a metric that tells us what overall is happening. But what is interesting here is the borrow fee rates. This also is provided to us by one broker, but that one broker provides market data. And so it is actually a good bellwether of what is going on in the rest of the market. Kind of like mortgage rates. You're not going to find one bank providing really high mortgage rates while all the others provide really low mortgage rates. You're going to see that these numbers are generally competitive across all brokers. So if one is offering 1.118%, then you can expect that the others are probably offering something similar or will soon thereafter. What this means at a 1.18% APR, this is the lending rate that borrowers of the shares must pay to the owners of the shares in order to borrow them. Right now, the number is pretty low, okay, which suggests that there's a lot of shares to be borrowed. There's not a scarcity of demand. Typically, whenever you see hard to borrow shares or shares that are, companies that are close to having a short squeeze, this borrow fee rate can go, way up. And I don't mean just like 10%, but it can go to 75%, 80%, sometimes even over 100%. And this is listed in as an APR, annual percentage rate. So you can see what we're talking about here. Now, don't be discouraged. This number can change overnight. We've seen it go as high. I've seen numbers go from 1 to 25 in just a matter of days and then back down. So it's a very fluid number. But if you're going to see a short squeeze, this number is going to have to get off of the 1% number. And it's going to have to go up, and it's going to have to go way up. Okay, so keep track of this number here. Short volume is interesting. It shows you the total short volume uh, um, uh, in the market as measured by FINRA. So it's a small sample. It's not the entire market. But the thing is that it's not a prerequisite to have a high short volume in order to experience a short squeeze. So it's not as predictive of a short squeeze as you might think. Okay, so I'm not going to spend a lot of time on talking about that at this moment. I'm just going to move on down, and we're going to pass over fails to deliver as well, because fails to deliver is a backwards looking metric. This data is updated twice a month. We get it in batches. So even though it says it's daily here, it only comes to us twice a month from the SEC. but it tells you kind of what happened in the past. It's not a predictor of the future. So it's not as important to us when we're trying to predict if a short squeeze is going to happen. Institutional put call ratios, very interesting metric to tell you about institutional sentiment. If the number is high, then the sentiment is low. If the number is low, then the sentiment is high. When I say low, I mean below 1 or above 1. In this case, the sentiment is actually below 1. The put call ratio is below 1, which suggests bullish sentiment for AMC, which is good and bad, I suppose, right? It's good if you think AMC is a long-term good buy. It's bad if you think that there's going to be a lot of companies pile in to continue shorting it, because if more institutions are thinking it's a good deal, then you're going to see less shorting. I guess it's kind of how you look at things. But when you get down here to the short interest, the official New York Stock Exchange data and our Fintel updates, then it becomes interesting. The last update we got from the NYSE was on May 28th, and the short interest was 102 million shares. That's an increase of 8%. So you can see that this number has been climbing every time, pretty much every time, and it continues to climb. If you take that number, the short interest number, and you divide it by the shares outstanding, you get 22%. And if you divide it by the float, then you get about a 35% number there, which are both really elevated. Okay, really elevated. And this is probably one of the, I shouldn't say this is probably, this is one of the primary reasons why AMC continues to rank highly on the short squeeze scores, because it has a very high, very elevated short interest over float number. Now, we calculate days to cover on a daily basis. This is the days to cover that comes from the NYSE, and they don't ever list anything below 1, but we calculate it on a regular basis because this is also key to understanding a short squeeze. The days to cover is basically the short interest divided by the average volume. And you can take the average volume and you can look at it the last 30 days, you can look at it the last year, but we look at the last 5 days in order to be able to provide a more kind of current and accurate number. And we do that because short squeezes happen very rapidly. And if you're looking at volume for 3 months and you're dividing that into the short interest, you're looking at volume from 3 months ago, right? And short squeezes can happen in a matter of days and in a week or two. So we look at the last 5 days of volume, and then we divide it by the short, we divide it into the short interest to get the days to cover. And right now it's really low. And I will explain to you what that means. Well, I'll tell you what it is right now. Days to cover is let's assume that all of the people holding short shares had to go out and buy shares to cover their holdings, their positions. The amount of volume right now with AMC is so great that they would be able to spend 0.39% of a day or some small fraction of a day, and they would be able to buy all the shares and they'd be able to cover their short interest in that amount of time, which means that there's an ample amount of volume out there that would allow the short holders to be able to cover their positions, which is not something that you necessarily want whenever you want a short squeeze. You want just the opposite. So let's go take a look at some other companies here. If I go back up here and I click on the highest ranking stocks, or I click on the Short Squeeze Explorer, if I come up here to screens and click on highest short squeeze scores, you're going to end up in the Short Squeeze Explorer over here. And this is basically our leaderboard. And if I plug in AMC right here, what you're going to see is that this is 121, which we already knew, out of 10,000. And we can see the short interest percentage of float is 35, the days to cover is 0.39. And there's a couple other numbers here that I haven't explained. Other things that are required for a short squeeze is you need to see the volume and the price go up. And the reason is because if a company is shorting a stock and the price goes down, then obviously they're going to be able to, that trade remains profitable. They've borrowed shares, they've sold it, the price goes down, they can buy them back at any time in order to be able to cover their positions. But if the price goes up and the price goes way up, then that trade becomes profitable and unprofitable, and it becomes kind of untenable And it's possible and it's likely that the higher that share price goes up, the more likely is their broker is going to ask them to cover their positions. When the broker tells them that they have to cover their positions, they have to buy those shares back. So of all the things that you need to have in order to have a short squeeze, you need to have a high short interest over float. You need to have a high borrow fee rate. You need to see the price go up significantly. But in order to maintain a high price momentum, you also need to see some high volume momentum, which is why this is important here, this number here. And so what we're seeing here is we've got a lot of factors that are important. This one, and this one are all kind of key prerequisites to a short squeeze. But you need to see the short borrow fee rate go up in order for this to happen. So keep an eye on this number here. And when you see this number start to climb, you'll see the short squeeze score go up, and the likelihood will also go up. There's one other thing I noticed about AMC when I was looking into this today. I went looking at the ownership data over here, and I noticed that the actual institutional ownership for AMC has really climbed in the last quarter. We track ownership data significantly, and we gather all of the filings for funds. And this is just a huge number here that has gone up. And if you actually look at the ownership accumulation score, which is kind of our way of measuring and ranking companies based on institutional ownership accumulation, it's ranking, at a 91.45 out of 100, which is also very huge. And the way we look at the score is we take a look at the number of new institutions that are reporting positions, and we also look at the percentage of percentages of the portfolio, or the percentage of allocation of each fund. And what we're seeing here is that there's probably a lot of new institutions buying into AMC, and all of the institutions that were already holding AMC have increased their allocation significantly. And that means that this ownership accumulation score is a 91.45 out of 100, which means that it's got higher institutional accumulation than 91% of its peers, which is a pretty big deal. So this might be something that could trigger a short squeeze. But the important thing that you got to see is this borrow fee rate climb. And when you see that start to climb and the price momentum stays up, then you'll see some action, I think. I hope this is helpful. Let me know if you have any other questions, put them in the comments. And if you like what I'm doing here, please subscribe and provide some comments on what you think I should look at next. Thanks so much.